Let's get back to this morning's jobs number. Look at it on your screen. 216,000 new jobs added to the economy. 3.7%. That is a low unemployment rate. Peter Morici joins me now. You know, Peter, that is a strong report. That is a strong economy. You're going to give me an argument on that?
Not at all, no. I mean, we've been hearing a little bit about JOLTS coming down a bit, but the job openings still well exceed what was out there before COVID. There still is a worker shortage. The job market might not be as strong as it was 6 months ago. It's not red hot, but it's hot enough. And I don't think that we're going to see wage pressures go away because of this. This notion of all of a sudden it's a buyer's market, I think is a bit delusional. You know, if you ask individual businesses, how's your business? They say, well, pretty good. If you ask Pepsi how it is, they'll say, I'm going to raise my prices. If you ask them about the macro economy, they're too busy reading economists who are at universities and in Wall Street and so forth, who are using models based on pre-COVID times and saying, oh, the world is coming to an end. It is not coming to an end. It's just slowing down a little bit.
And the Fed is probably not going to lower rates when you got a strong report like this anytime soon. Agreed?
Yes, and wait till you see what the Treasury does this quarter. See, last quarter, their borrowing requirements went down. Now they're going up again. And you wait till you see what that does to the 10-year Treasury rate. They've been stacking their purchases in the third quarter more towards 2-year bonds to try to take pressure off the 10-year Treasury. They'll be running out of options in that regard. Have you noticed how the 2-year rate has stayed high?
Yep.
My feeling is that we're looking at a period where the market starts to do some of the Fed's work for it again, and the Fed won't want to upset that very much. Not with jobs numbers like these. Right. Goolsbee just can't say, gee, we got to do something unless the economy will tank.
Right. I'm going to change the subject for a minute. Nancy Pelosi's stock trades saw a 65% return last year. This comes as Congress has stalled talks on banning lawmakers from trading stocks. Do you think there should be a ban? Peter?
Well, I think Congressmen and women should not be trading in the individual stocks and so forth. They're involved in too many regulatory activities that have a consequence for their holdings. My feeling is they should be in index funds, and those should be put aside in a way they don't touch them. Now, you got the problem that she's got a spouse. I mean, should spouses really be limited?
Right.
It's a very tough question in this day and age.
I've got a solution. How about immediate full disclosure? When any member of Congress makes any trade of any kind, it's posted. You can see what they've done, where they bought, why they bought, and how much they bought. What's wrong with that?
I like that very much. It's kind of like corporate disclosures. You know,
yeah.
What are the principals doing? Why not? But, you know, I really get a kick out of this. The Democrats hate the free market. They despise capitalism. But, you know, if you start to threaten the New York Times intellectual property, it sues a nonprofit like ChatGPT. And Nancy, goodness, Nancy, shouldn't you really be a Republican with stock holdings like that?
65% return is pretty good, if you ask me.
Well, she likes leveraged positions. I mean, if you buy in the options market,
that's it.
You know what happens is when it goes up, you really go up. When it goes down, you're in a lot of trouble.
Oh, she played it right. That's a fact.